You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 9th of November, 2015. We always start, now this is our weekly review, okay? This is not like our daily review. And what do we do? Just to give you a forecast. We're going to look at the weekly charts on the total market, the S&P 500, and the NASDAQ 100. We're then going to look at gold. We're then going to go and talk about what moved the market this week, the important news. We only do this once a week because, as we say over and over here at chartingwealth.com, follow the charts, not the noise. Well, we do tune in to the noise that's been out there over the course of the week to see what really affected the market. Then we look at what's coming up this next week as far as things that could affect the market, announcements that are going to be made, that kind of stuff. And then we wrap things up. Now, this is different than our daily, and we encourage you to sign up at chartingwealth.com. If you ask for it, we will put you on our email list. It's right there on the front page. Give us your email address. We'll email you our daily review and our weekly review and forecast. So you'll get basically 6 emails with those videos on there every week. Also, you can just go to our place at iTunes. All you got to do is put in Charting Wealth. You'll find us. We have a podcast every day, an audio podcast, 5 days a week when the market's open, plus that weekly review and forecast is also available at iTunes if you just subscribe. And all this comes to you for free. So if you want to do us a favor, a little payback, go subscribe at iTunes. Give us your email address. Let us email you this on a daily basis. Also, when you go to iTunes and subscribe, would you be so kind as to give us a 5-star rating, say something good about us? Hopefully you feel that way if you're tuning in every day and find us helpful. We'd really appreciate it. Okay, let's get to work. IYY. That is, again, the total market. It represents the whole market. It crossed over, going up back on the week ending on the 16th, the week beginning of the 23rd of October. Now remember, we're getting into the fat time of year, the fall-winter trading zone. School's back in session and the markets are cranking, and that's what's happening. This is a pre-election year, so we're seeing the market move up, up, up. It has been over the last many weeks. We're looking at green up-moving candles starting on the week ending on the 9th of October, and it's been going up. It has finally, has it finally reached? It has. It's actually over the course of this week, it went above where it started on that bad week where we saw the huge drop on the 28th of August after the Fed announcement. And then, of course, looking at the weekly chart, it looks like it pretty much slid sideways for many weeks and then started really moving up on that week ending the 23rd of October. Now, we always like to look back on the daily chart, just sort of see what happened throughout the course of the past week, starting on the 2nd of November. We have green up candles until Wednesday, and then Thursday and Friday, we see the market going down after there was another Fed announcement that rattled the market a little bit. We had some real indecision on Thursday where we have what is almost a spinning top as far as candlesticks goes, and then down moves on Friday with a candle with a long wick down. It means that the bears were able to pull the market low. The bulls pushed it up some, still down for the day. The market technically was down 0.10%. Still not below our 2-day trend line, which matters a lot to us, but that's where we've seen the daily market go now. Still not a crossover yet on the daily. So we do have the derivative oscillators lost a lot of its speed, but again, the weekly chart is still in an up move, a strong up move. Doesn't mean that can't end, but you've got that big wave pushing the market up in the fat time of year. Now let's go to the S&P 500. What do we see there? Well, S&P crossed over again that week ending the 23rd of October. And again, don't forget the S&P 500 is represented by SPY, is representative of the 500 big companies that are a lot of the volume of the total market. So many times it looks similar to IYY, the total market. We see it moving up, green candles, 1, 2, 3, 4, 5 green candles. So 5 weeks of good up movement with that crossover going up there on the week ending the 23rd of October. What do we see happening on a daily basis? Well, we'll drop to the daily chart, and very similar to what we saw in the total market, strong up moves through Wednesday. Then we have what's called a doji, where the market went down just as much as it went up, and it sort of opened and closed at the same spot. Again, lots of indecision there. What did the market decide to do on Friday? Roll down. The S&P 500 was down 0.05% for the day. Don't have a crossover yet going down on the daily chart, but doesn't look like it's far from it. That is on the MACD, the moving average convergence divergence. Now, let's range back out on our weekly chart and see what happens with the Qs. What is the Qs? Well, that, of course, is the NASDAQ 100. It started moving up. Back again, we see on the week ending the 9th of October, and we have 5 candles of up movement for the weekly chart. Green open boxes on our Hinkiashi type of candlestick trading that we like to watch. We have the derivative oscillator is heated up this week, and we continue to see a divergence between the signal line and the MACD, meaning that the movement is continued up. What do we have going on when we look back at what actually occurred daily over the course of the week? We see again that same effect from the Fed speak, bringing the market to a halt in its up move and a red down candle for the day, crossing through, crossing through the 2-day trend line on the Qs, the NASDAQ 100. So again, strong up moves on the weekly chart, but some weakness showing on the daily. That's where we are. We look at the total market. It's always worth seeing what's going on in the total market on those big charts as we end every week, get ready to go into a new week. What's up with gold? Well, gold, big strong down move over the course of the last week. A down move the week prior, ending the 30th, and a red open down move, red open box down move on the candlestick for the 23rd. Now, if we go and take a look, drill in a little more on the daily chart, you can see that it crossed over on the daily back on the 22nd of October and has continued to move down rather briskly. Of course, we have a has been over the last several months, phenomenally accurate chart that we use, which is the 4-hour chart, and we've continued to see it also mimic these down moves. So gold is in a strong downtrend on the daily chart. Looks like it's trying to get close to crossing over, going down on that weekly chart. That is where our charts wrapped up for the week. Keep those big moves in mind as you watch the smaller moves on our 2-day and 4-hour charts on our daily briefings here at Charting Wealth. Now, let's talk a little bit about what's actually been moving the market over this last week, or not necessarily moving the market, but what's been in the news, what really happened over the course of the week. Well, the U.S. added 271 jobs. The jobless rate fell. That is for the jobs that are reported, the jobless rate, 5%. Now, this is interesting because weekly jobless claims, and again, this is a different measurement, jumped to 276,000. So again, the government likes to give you rather confusing numbers, don't they? They don't tell you how many people are actually not looking for work and are totally out of work. Sometimes you wonder about why they give you the figures they give you. Go figure. U.S. trade deficit shrunk on reduced oil imports. U.S. auto sales, with all the free money, guess what? Anybody can go get a car, and U.S. auto sales are at a 15-year high. How long will that last? Well, how long will the free money last? U.S. manufacturing declines while the services industry rises. Well, sort of what we are now, right? We're making less and serving more. Who are we serving? Well, that's an interesting question, too. U.S. productivity is alleged to have risen 1.6%. That's interesting. We've got an annualized growth in the third quarter of 1.6%, but a key contributing factor was the 18% drop in hours worked by the self-employed. Isn't that interesting? China's factory output is still contracting. Lower GDP is targeted. We see the Eurozone, their purchasing managers index has risen a little bit. And German industrial output and factory orders slide. Why? Do you think it's the invasions of the hordes from the east? That's going to continue to weigh on them, isn't it? Well, let's talk about what we're going to actually see happening over the next week. Not a lot of really big news expected unless something goes bad wrong. We see China's going to report its industrial production on Tuesday. We're going to see on Thursday U.S. job openings and labor turnover surveys. The JOLTS is going to come out on Thursday, along with the industrial production for the European Union. It's going to be reported the same day. And then on Friday, U.S. business inventories and consumer sentiment is going to be reported, and the European Union's flash GDP data. So maybe something on Friday as far as the rest of it goes, unless there's something really, really bad coming out. Nothing like Fed announcements or any of those kinds of things to really jolt the market. Again, do encourage you, if you don't have a copy, you need one. I'm sure you can get it at a discount now that the year is almost out, but you always need your Stock Trader's Almanac. You need to make sure you want to ask for a Christmas gift. Ask somebody to give you the Stock Trader's Almanac for 2016. You got to have one of those every year, consult it every day. I mean, we really appreciate Yale and Jeff Hirsch and all the great trends that they give. You know, the market moves in cycles, it's waves, and there's a lot of things that you can predict with some accuracy. If you look at the big macro picture, can help you in the micro. So I very much encourage you, do as much reading as you can. If you don't have a Stock Trader's Almanac, you need it. It helps you figure out what's going on a daily, a weekly, a monthly, a quarterly, and a yearly basis. But that is it for our weekly review and forecast from chartingwealth.com. If you've not already signed up for our newsletter, please do so at the website at chartingwealth.com. It'll include every week this weekly review and forecast, plus our daily reviews. It'll be in video format. We would love to send that to you. And if you don't already have our charting layout that we use every day, it includes a charting layout for gold, for the total market, for the S&P 500, and for the Qs, the NASDAQ 100. We'd be happy to send that to you for free, along with the link for our 15-minute How to Read a Stock Chart video. That stuff's free. All you got to do is send us an email, cw@chartingwealth.com. That C is in charting, W as in wealth, cw@chartingwealth.com. Thanks so much for joining us. Hope you have a great week investing and trading, or at least learning how to do so.